Hello and good morning, everyone. Today is Wednesday, November 16th. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. Good morning, Graham, Kelly, Eileen, Pooja, Rich, Mark. Great to see everyone here in the room. So, I guess there's no such thing as resistance for the dollar index. This thing just continues to rip higher. We now just topped and tagged that 13-year high, 100 spot 51. We talked about that level or yesterday in the webinar. That's December highs from last year, and essentially you're getting a little bit of a pullback from there. I'm kind of falling out of love with the dollar crosses as it were right now. Momentum's in overbought. You've breached the 2015 high day close, the 2016 high day close, and you're now tagging that 13-year high. So look, I know we've been saying that the dollar looks tired here. The indices specifically look like they're stretched, and that continues to be the case. We'll go over some trades that I've been involved in. I've been messing around with sterling yen, dollar yen, Aussie dollar, all the pairs that we've been highlighting over the last couple of days. The only thing that worked out last night, or worked into last night, I want to say, was the pound yen short. Got tagged at break even on the rest of that trade, got stopped out break even on an Aussie trade, and another break even on dollar yen. So I'm still looking for fresh new opportunities here as the dollar just continually pushes this new high. So we'll go over those pairs. We'll go over euro pound from last night as well. And pound dollar. Obviously, we got the release of the UK jobless claims coming out kind of mixed. You saw the unemployment level drop, but certainly the jobless claims were much higher than expected, and so were the actual job gains that we got last month. We'll review that data as well. Aussie CAD continues to progress very nicely. That's coming to the secondary and final target at the yearly open. So if you're holding Aussie CAD shorts from last night update, this is where you want to be closing out those positions, or at least taking some profit, bringing your stops down. Okay, that's at support. Aussie dollar in general saw a breakdown last night, and we'll take a look at that. Keep in mind we do have Australian employment numbers later tonight. And then we'll touch base on Kiwi dollar, Aussie Kiwi, dollar yen. And Kelly, I got your question here on dollar CAD. We forgot to cover dollar CAD yesterday in the webinar, so I do want to make sure that we cover that today. We'll touch base on the precious metals as usual. Crude inventories are out at 10:30 Eastern today, so we'll go over the crude levels as that continues to hold just below near-term resistance. All right. That's a mouthful. Let's jump right on. Dollar Swiss, if possible, Mike. Trevor, I'll note it down here for sure. I'm going to be honest with you. I don't really follow dollar Swiss that much, but I can definitely take a look for you. No worries. Okay. Let's jump right in. So again, for the dollar index, I don't want to really spend too much time on this. There's not really much here for me. Only if there's time. Trevor, I always make time for you, my man. No worries. So again, there's not really much to say here. The 151 level is, again, that December high. Really, it's going to be really tough to ascertain near-term targets on a topside break beyond here, guys. So, we'll want to take a closer look into near-term price action. We're using this just as a gauge for base dollar movements, but you're seeing divergence into the highs. Okay, price action making a higher high, series of lower highs, and you're at resistance or a fresh multi-year high. So really, near-term key support, all the levels that we've been mapping out remain unchanged. Okay, so near-term support still 99.50, that former 88.6. That's really not the stress right now. It's this lower bounce that we got here yesterday and this trend line, which travels right in that zone between 99.53 and 99.73. That's basically what the near-term support is. Let me bring this out into a 4-hour chart. Any chance? No. Nope. All right, so those are sort of the near-term targets that you want to keep in mind on the dollar index. You need to get back below 99.53 for this to even start to mark any type of near-term correction. That being said, we want to respect that support at 99.53. Okay, let's jump into yesterday's update. First up on tap was pound yen. This was the one I was most involved with yesterday. Again, keep in mind we still do have UK data on tap. Here's what the UK data looked like last night. Let's take a quick review. or this morning rather, I should say. Here is the claimant count. So we were looking for a clip of 2.3%, came out right in line with expectations. Jobless claims rocketed 9.8 thousand. We were looking for a print of just 2,000. Not only that, you also got a big upward revision to the last month's read from just 0.7 thousand to 5.6 thousand. This is jobless claims, guys. So the larger the number, the more new claims are coming in. Okay, so this is definitely not a positive print. Then you got the average weekly earnings, also slightly weaker than expected, not seeing those wage inflations uptick like we were looking for. The ILO unemployment rate, however, downticked to 4.8%. This could be a result of labor force participation, so you don't want to put too much emphasis on this. More so, employment change, 3-month over 3-month, you're looking for a gain of 91,000, only came in at only 49,000. So really mixed data, lesser than expected job gains, bigger than expected jobless claims, lower than expected unemployment rate, right? So you sort of saw a mixed reaction on the sterling crosses. Sterling dollar did see a little bit of a pullback. Sterling yen didn't really react much. We are off the highs. And here's what sterling yen looks like right now. Well, before we do anything, guys, just a really quick relative performance on the US dollar heading into the open looks like this. So you can see that the European block is kind of unchanged on the session, even sterling with that data kind of holding its own. Biggest losers, the COM block, okay, save dollar CAD, which is doing its own thing. Excuse me, but you got Kiwi Dollar down 0.68 and Aussie, biggest loser on the session, down 1.14%. Keep in mind, we still have Aussie employment numbers later tonight. So with that kind of view of what the dollar is doing, still strong against major counterparts going into the U.S. session, here is what pound yen looks like. Start off on the daily chart. So if you guys remember, the basis of this idea that we highlighted early in the week was the fact that the daily chart was coming into such a critical support or resistance range rather right here. You had the 618 key retracement. This is from the post-Brexit decline. You had a long-standing slope support, now resistance, okay, right here. And you had a current operative slope off the lows, same slope, same slope, same slope, resistance, also here. So we're kind of messing with that right now, and calling these turns is never a simple task, guys, nor is it something that's encouraged, but with price at such a critical level, I'm still on the hunt for short triggers. And every time I see a spike in price or a decent short trigger, I've been taking it. You guys remember early in the week on Sunday, I was in a short here. I booked 30 on the way down, stopped break even on the rest of it on the way up. Again, last night, into the close of U.S. session trade, this thing popped right through. I got a decent entry at 136.30. Again, took the short, we booked 55 on that one, and on the rally up, got stopped out, and the rest of it break even. So when we're trading these turns, we need to be extremely nimble, because you never know if the resistance level is going to break, and if it does, it's going to plow through. So I don't want to sit there and kind of, you know, test it and look for the concrete turn. I'm going to be in a position, I know I want to be short. As soon as I get a quarter of the daily ATR, again, bring your stops to break even, take something off the table, and if it goes, it goes. So, you know, the focus is still against this region. We've probed through it twice now. 36.18 is still the level that we would need to close above to mark breakout, and then you'd be looking for 138 and a stretch into 140-160 on a longer term play. But the risk does remain a little bit, while below 136.18 still remains a pull to the downside. Now, I do want to note, and I want to highlight, that momentum is an overbought condition on the daily chart, not necessarily the type of market that we want to try to sell. It's the break below 70 that would be the mark of a more prominent high. But that being said, nimble is the name of the game. You have a larger range scalp here, quarter of the daily TR still showing about 47 pips. So for me, it's been a decent, you know, it's been a decent play this week. Here's what it looks like on the intraday charts. Okay, so initially we had a short off here early in the week. Again, we took a little bit off, stopped at break even on the way up. Again, on this spike, took another short, took off 55 on the way down, got stopped break even on the way up, and it's still marking divergence on this 4-hour chart. And it doesn't really look like a breakout to me, so I still think that this thing could pull back lower. That being said, guys, be nimble, okay? I don't want to start encouraging you guys trying to call the high on this, but from a scalping, I could just show you what the live charts look like right here. Here was that late New York spike, right? Soon as momentum came crashing right back below 70 again, I just jumped right into that position. That was on a run and a stretch through this key resistance. So price at resistance, momentum marking a break below 70. You take the short, stop against the highs. Again, quarter of daily ATR is 47 pips. Last night this was showing 49. As soon as we got 49 pips, clean that up, stops at break even, and you see if you get the break. If you do, great. You're still in the position. If you get the pullback, stopped at break even, no harm, no foul. So there was actually another opportunity to get right back short again, right? You had a nice opportunity here on a 70 break. There's a nice support trigger right there that gave out. Okay. And again, you'd be up another 50 pips to the upside, looking for, you know, a possible move more aggressively to the downside here in pound yen. Near-term support targets. If this does materialize, if I get another entry here on the way up into the U.S. trade session, you're still looking for 35.15, former swing highs, initial weekly opening range high. The weekly open, 134.27, and then key support still rests at 133.46, 133.30, this region here. All right, so no change to the levels in pound yen. Still, you know, it's still flirting with resistance. And at the end of the day, guys, I don't really want to get aggressive on this. If it pops through, like I said, you're going to see 138. You're going to see 139.28. That 786 retracement on the longer term is right back up here. And the broader trade, in my humble opinion, still remains constructive. I'm just looking to play a near-term pullback. Inevitably, I'd be looking to buy, you know, into those lower parallels. Any questions on pound yen? And certainly, despite the fact that you saw sterling dollar pull off, yen weakness is keeping this afloat. And it's important to know which one of the dynamic, you know, which one of the pair, you know, which currency is really driving price action. I'd have to say, with what's going on in the sterling cross, you know, the yen weakness seems to be the story that's really driving this pair. Questions on pound yen? All right. Moving right along from yesterday's update, we want to jump into the euro pound. And this is another one where I highlighted this on Daily FX yesterday. I know that we talked, Eileen, about this at length. I'm not sure if it was with you or Dee. We were talking about it at length yesterday for this euro pound move. Still looks really good. Not my particular favorite trade on an intraday basis, just because the ATR is kind of tight, and at the same time you're working with pound pips. So it's kind of like the worst of both worlds. But when the setup is clear, the setup is clear. Here's what euro pound looks like right now. So the basic premise of the trade was, look, you came off a big resistance region. Never thought I'd see the day the grandpa trade was on your setup page, says Eileen, right? It's the first time for everything. But here's what the daily chart looked like. And the basic premise of the trade, again, you made a big reversal. This is a long dated 786 retracement. You probe through, pull back. This is a break of the objective monthly opening range. We talked about that yesterday. And certainly the move below 87.40, 87.38 to be exact, is you know, continues keeps the focus lower while below that region. Bearish invalidation, 88.15. That's a 2013 high. You're looking for a move down into 84.90, 84.79 initially. Now, I highlighted both of these targets because I think both of these levels represent areas of which you'd be, you know, vulnerable for an exhaustion low and a rebound higher. But the first target would be that 84.79, 84.90 region. I'd look for a reaction off that. More importantly, this would be a more concrete low, I think would be more critical. It's a 38.2 retracement from the entire advance off the lows that we made back last year. It's also the swing lows that we made on a closed basis back in September. And you have slope support right in there as well. So broadly looking to sell rallies. Okay, here's what the intraday chart looked like the 4-hour last night. The weekly opening range high, and why this is appealing to me right now from where we are is because the weekly opening range high maxed out right at the bottom of that range. So 87.09, 87.36, this key range on the daily chart is your key resistance. And the weekly opening range is taking shape just below that. So if we break to the downside, you have your clear-cut targets that you're looking for. If you breach to the upside, look for reaction at 88.15 or bearish invalidation level. If that clears it, this is the threshold of which you look for a serious type of breakout trade. That's the monthly open right here. You'd look for just straight on continuation of the broader uptrend. So those are sort of the game plan, contingency plans, let's call it. As it stands right now, 87.40 near-term resistance, looking for a run into 84.90, 84.79. Here's what the intraday chart looks like now. Not much change from last night. Questions on Euro Pound. Number 3. You're not out of the woods yet as far as UK data is concerned. I do want to continue just to highlight that real quick. Obviously, we went through the jobless claims yesterday, tomorrow, or this morning. Tomorrow we get retail sales. Looking for a core print, ex-auto and fuel at 0.4%. More importantly, year on year, 5.4. Nice uptick there. Broader figure here, headline, looking for an uptick in the month on month and year on year. So if we do start to see retail sales start to pick up, again, that would be encouraging for the health of the consumer. Could keep sterling afloat. Keep that in mind. 4:30 a.m. tomorrow here in New York. Okay, last but not least, from the sterling crosses of yesterday's special sterling update is British pound. Here's what the sterling looked like on the intraday chart. Basically still looking for a move lower to get back on the bullish side of the trade. You're still holding within the confines of this ascending median line formation off the low. So not really anything too fancy here, but here's what the pound looks like right now. It's kind of been a lackluster trade for the last couple of days. Bring up the 2-hour, show you a little bit better of intraday price. But you can see it's really holding this formation pretty nicely. Okay, so lower the 25% line here, catching this low. We turn just ahead of it right now. You're looking for this consolidation break, basically, guys, near term. Downside break and areas of interest for long exposure, in my opinion, 123. That'd be the 618 retracement of the rally, the lower median line parallel, former median line resistance, support, also support, all converge right there. The level you need to beat as resistance to get breakout mode, 125.61. I think Jamie's looking at the same exact level. If you guys read yesterday's swing update, we're looking at the same exact levels. So 125.61 is the 618 retracement. You have the weekly open just higher. This is sort of your breakout zone for continuation. Largely speaking, I still think you're at risk for a little bit of a pullback here into key support before launching higher. Bullish invalidation, I'm going to hold at 123. Nice pivot in price as well. Former highs, 618, and those median lines we talked about. So broadly looking a little bit lower near term to get long on pound dollar. Look for that consolidation break. Like I said in yesterday's update, not my favorite pound cross. Which is kind of interesting because pound yen is known as the widowmaker, but I think the technical clarity there is a little bit clearer at this point for near-term price. But nonetheless, keep this in mind. Again, you have those retail sales numbers out of the UK tomorrow morning. Any questions on the British pound? Number 4. We are running through these today. Okay, the last thing from last night's update, and the setup that actually I'm kind of frustrated at, because the setup that we've been following since the since last week that worked the best. I actually didn't get a chance to get in, and that was Aussie CAD. Boy, was I frustrated this morning. It's right at support, guys. It's at the yearly open. We've been following this trade for over a week. As we came into key resistance, we were talking about this all last week. You had a long turn slope resistance. This is just a basic copy off the support line that extends off the lows we made last year and this year. Okay, take a median line parallel or that parallel off the highs for December. Caught the highs. Current slope for the upslope. Caught the highs. 100% extension off the lows, 2 equal legs up, caught the highs. Momentum divergence. I mean, this thing was loaded. Smaller ATR, so for me, I was looking for more action. And again, I didn't get a chance to get in this, but here's the decline. First target was the monthly open. That got taken out. Second target was 101.20, 101.40. As I noted yesterday, I thought we could have gotten a little bit of a bounce off this to move finally into that target, but market had something different in mind, and he just went for a straight shot right into key support. This is basic trendline support off the yearly lows. It's the yearly open and the lower parallel, if this formation's in play. Now, we don't have too much play off this just yet, so I don't want to stress it. But certainly today's close, if we close above that region, would suggest you're at risk for a near-term rebound towards resistance near, 101.44 again. It's beautiful play. Hope someone here got a chance to get into this. Again, here's what the daily chart looked like. Here's what it looked like earlier in the week on the 13th. Boom, boom. Look for that major support here. If this breaks, you're looking for a straight shot near 99.87, 99.70. Nice pivot in price. 38.2 retracement. Okay. And the 100-day moving average, all into this zone right here. Here's the near-term chart looks like on Aussie CAD. Weighing over sold territory. Look for that pop back above 30 to give you a little bit of signal for a recovery. I'd be looking for a move back into that 50 line, which converges again on that basic 236, 101.44, 101.50, near-term resistance. Questions on Aussie CAD? An interesting setup, and certainly with the CAD doing what it's doing. Obviously, yesterday you got a massive reversal in the pullback in the dollar CAD. Again, a frustrating story because we've been waiting for that, but you can't choose when the market's going to make its move. So we will take a look at dollar CAD in just a moment. Actually, we can jump into that right now. Aussie CAD was number 5. We'll jump into dollar CAD here, number 6. So this is for you, Kelly. Here's what dollar CAD looks like. Okay. Here's what I want to say. The level at which it turned was good. The level of support I'd like to see break is actually the monthly open. You see this level right here? What is that at? 134.08. That level actually converges on the sliding parallel here. And that's at the monthly open. A nice objective break below that right here too on the intraday chart. A break below that I think would be on the onset of a little bit more of a concerted drop in dollar CAD. Let me see what you're looking at. I'm still buying the pullbacks. It worked, but ... Kelly says, yeah, I'd be a little concerned just because this is the largest single day drop that we've gotten since October. And it's off a long-term retracement. Look at this. So this is the 50 of the yearly range. And these yearly retracement levels typically can be very fruitful. So I just want to be mindful of that. Also add to that this basic sliding parallel extending off the highs from July on a closed basis is pretty nice reversal off that. So look, this is what I want to say, Kelly. I don't want to scare you out of your bias just yet, but all I want to say is the only way I would agree with a buy the dip mentality is if price holds above the monthly open. It's obviously in an uptrend. The concern you run to is that you start to look for signs of exhaustion. A reversal like that off of a yearly retracement, that's your first signal. On every subsequent rally, you're seeing that this secondary sliding parallel, which has caught some really nice peaks, look at that, literally caught that high so far that we've made today. So look at the behavior of near-term price, and sometimes it can be very telling on what's going on. Still, to me, looks like you're signaling some sort of near-term exhaustion. Here's what the intraday. Yeah, so again, even in the momentum signature, on the way up, you can see the momentum signature RSI holding those highs near 64. The entire time price was rallying into that resistance. So let me do this. Let me add this long-term retracement onto the scalp chart so you guys can see it. That's the 50%. He says, thanks, pal. Looking for a setup, if possible, with crude inventories out in 90 minutes. Yeah, 10:30, guys. Don't forget, you get those distilled inventories as well. My Elliott wave count has it looking finished going up for this cycle, says Kelly. I could see that being the end of sort of that last wave 5, in which case you'd start to look for a near-term correction off that in a 3-wave pattern. Could be, for sure, yeah. Yeah, I'm just looking at near-term price, and I look at momentum and what's going on. And you can see, even if you take a look at this 2-hour chart, right, what's just going on in the momentum profile? You want to see multiple breaks into overbought territory, and that's when the market's got juice. Look at this on the onset of this rally. The entire time that you're struggling near highs, you see it, the momentum signature starts to fail at 70, starts to fail at 60. That's what we're getting right now. Failure here on this last stretch at 70 rather, excuse me. Failure to even get into 70 on this last stretch. Now we're looking for resistance straight up at 60 on this last approach. Long story short, this is what I would say. You've set the weekly opening range just below a long-term this is the 2016 retracement. So you've set along the weekly opening range just below a long-term retracement level at 135.75. I'd be looking for a break of this range. Not necessarily this low, but more so that monthly open, like I told you, 3407. 3407, 3575. Look for a break of that range. I favor a downside break near term for a correction in dollar CAD. Inevitably looking to buy it, but I do still think it looks a little tired here. Just of what account of near-term price is doing. All right, Kelly, does that help? You rock, pal. I don't want a bigger pullback. I do want a bigger pullback to hit up. Cheers, Kelly. Sorry, late about crude and silver. Nope, Conwell, you're not. We haven't covered them yet. We will jump into them in just a moment. Kelly, you're more than welcome. Cheers on that. And we'll be looking at dollar CAD definitely into the oil inventories out at 10:30 Eastern in New York. Okay. Let's move on. That was number 6. Conwall, let's do oil while we're here for you, buddy. Number 7. Let's just do crude oil real quick. Here's what the oil trade looks like. I tweeted this chart last night. You came into a beautiful region of resistance near term, and that region is defined by 45.95. I'm not sure why this is not corrected on the scalp chart. Sorry about that, guys. That's this region. Okay, and that's the region of resistance that we just came into that we were talking about yesterday. You remember, Conwall? You have the 100-day moving average, the 50 line for the current operative formation that we're assuming could be in play off the highs. I don't want to stress this, but the 50 line is there, and a basic 38.2 retracement of the entire decline off the highs that we made last month. So look, you could get a little bit more of a downside pull from here. I would be looking for a new low. I do think this might not be over. A rally into the monthly open, confluence resistance with that long dated median line might be the play still. Okay, the severity, the magnitude, the triggers from a momentum standpoint that was involved with the rebound that we just got, divergence into a trigger break in momentum, price off support, the severity and the sheer magnitude of the rally does have me thinking that you get a small pullback here, maybe back into that 200-day moving average, and then you make another attempt at a run. That would take you back into the monthly open, and then this cluster of resistance levels up here. Okay, let's just call it 47.80 into 48, 46.80 into 47, this region right here. Does that make sense? Kamal says, thank you. Yeah, you're more than welcome. Again, on the near-term chart, keeping in mind where we are, let me just give you a quick update on that. Sorry about that, guys. Just spilled my coffee. Real quick on near-term price. Okay, that actually comes in right with the weekly open, so I'm not going to stress that. But this is what I'd be looking at. As far as the risk for a pullback from here, that 50% retracement comes in at 44.17. The 44 handle is the 618 of the longer term trade. This is from the advance off the lows that we made for the year. So a very interesting level of which, if you get the pullback for this next leg down, could prompt that next sort of last stretch into resistance. Does that make sense, Kamwal? Sorry, it's a little disheveled here. I just spilled a whole cup of coffee, but took care of it real quick. Not on the keyboard, no, just on the table. Thanks for that. Kamwal says yes. All right. I hope you played that well, Kamwal, yesterday. We were talking about that rally coming right into that resistance region. I tweeted that last night. I was surprised that it happened so quick. But again, you know, a run back into that 200-day moving average. Look to the left, guys, on the scalp chart. Look where that 200-day moving average comes in. Right in that same exact region. So sort of a snapback, pull higher. I'm not sure if we get all the way down there. I do still think you make another high, but that's sort of where I'd be thinking right now on crude. Make sense? He says, yes, sir. All right. So that is crude number 7. Let's jump into my darling, the Aussie, the Kiwi, and then let's talk about Aussie Kiwi. Okay, Aussie Kiwi's reacting nicely to resistance. Broader trade is bullish. As I said from the start of the week, the near-term risk remains lower. So let's go over those right now. Aussie dollar made just a straight up, you know, boom. There's really nothing I need to say on this. That was the key support. We talked about it all week. 75.22 was the max that we were willing to withstand to maintain our upside bias. There was so much loaded there. Guys, you had, you know, the cleanest structure of all the dollar crosses, basic trendline support, a 764 retracement from the advance off the lows you made in September, 200-day moving average, median line resistance. Well, now it's resistance, former support. You name it, it was lined there, and it broke. Bottom line. End of conversation. Sub 75.21, you're still at risk for a lower move here in Aussie. You're looking for that subsequent downside target we just missed on this stretch was 75, 74.54. But on the near term, what I wanted to highlight is this structural support here. So this is off of just the near-term highs that we made last month and this month. That's the slope you're looking at here on the intraday 120-minute chart. This one has been defining price very well near term. We've been following this in the scalp charts for the last 3 weeks. And the lower parallel comes in right here. I don't want to add it to the daily chart because it's going to get super messy. Okay, for the daily chart, I want to work with this as the operative one, sort of driving things. Near term, respect that slope that we just came off of right now. All right. Again, there's that 50% retracement just lower, 74.70. So I do have us at support near term. Momentum on the intraday chart right there at 30. Okay. Could see a rebound off these levels. You are looking to sell rallies while below this region right here. This region is defined by the weekly open, former slope support, the current operative sliding parallel here of the slope we're working with off the highs. That's 75.40. Near-term resistance still 75.20. Below the 50, 74.50 rather, is this 1618 region into the 74 handle, and this is huge. This is your next like big downside target. This is the swing lows that you made here. Not a big deal, but also a 1618 clean extension from that massive drop off the highs. So a nice cushion of support down here if we make it sub 75.50, 74 or sub 74.50, excuse me, 74 into 74.20. Key area of support on a continued move lower. Bearish sub the weekly open. Questions on Aussie dollar? Now, as far as Aussie data is concerned, you still are on tap for those employment numbers later tonight. So real quick, here's what the data block looked like yesterday, or was it Westpac that came out? No matter. Tonight, employment change. You're looking for a gain, a nice snapback of 15,000 jobs. We got a contraction of 9.8 thousand the previous month. Unemployment is expected to uptick from 5.6 to 5.7, okay? But the more important thing, and why this wouldn't be a negative development, is because of the participation rate. Participation rate is expected to uptick from 64.5 to 64.6. As we always note, an increase in labor force participation will inherently tend to put artificial upside pressure on the unemployment rate. As more, laborers enter the workforce, that will skew or tend to put pressure to the upside on the unemployment rate. And we always talk about this in the other side of the trade too. When labor force participation contracts, everyone says, oh, well, unemployment dropped. Yeah, but that's not for a good reason. That's because we have discouraged workers leaving the labor force. So watch that dynamic. If you see an uptick tonight in unemployment, it's not necessarily a detriment to the Aussie markets. If it comes alongside a hold at 64.5% in the participation rate, that would be negative. That would be negative. But certainly anytime you see the unemployment rate uptick or downtick shift to participation, they tend to offset each other. So it's just some food for thought there on tonight's data. Again, that's at 1930 here on the East Coast in New York. All right. So that's Aussie dollar. If there are no other questions on Aussie dollar, again, you're at risk for a rebound here, still looking lower below the weekly open. Downside targets remained unchanged. And I guess let's take a quick look at Kiwi, and then we'll do Aussie Kiwi now that we have a kind of our bearing straight. So Aussie was number 8. Kiwi is going to be number 9. And then Aussie Kiwi will be number 10. Here's what Kiwi Dollar looks like. A little bit of a boring trade. You did see a little bit more weakness going on overnight, but again, I have us at that critical 70-50 level we've been talking about for so long. Basic 38.2 retracement of the entire yearly range. Slope support. Someone pointed this out here in the webinar a couple of days ago, just off the lows. Looks like we've probed through that already, so I don't want to stress it right now. but the lows that we made for last month were basically right here as well. 75.35, 75.50 is basically the support you want to be looking for heading into the US Open. If that gives way, I would be looking for a soft target at the 100-day moving average, not necessarily something more rigid. The reason is because just looking back at previous price action, the 200-day moving average hasn't really been all that critical in catching major highs or lows. And certainly a lot of times you'll see us, both myself and Jamie, talk about, okay, let's target this 200-day moving average. But that's because when you look at let me take a step back. Certain pairs, certain assets will tend to gravitate and give you a better reaction off that 200-day moving average. Looking back at Kiwi Dollar, wishy-washy at best as far as resistance or support. Even if you go back here, yeah, maybe some nice resistance targets and nice flips back in 2012 arena. Since then, you haven't really gotten too much play off it. So I would have a soft target here. I do think if we break below 70.35, those lows from last month, you're probably going to see a run on this median line, if not the next downside target, which would be the 50. That's 69.16. All right, it's all the way down here. So long story short, this marks your 6th day of consecutive losses, and you're at multi-month lows, near-term support. Here's what Kiwi Dollar looks like on the intraday chart. Divergence in price action making a lower low, the oscillator making a higher low, one of the reference points above 30, one of the reference points below 30, a decent signal. And certainly if we take a trigger off the highs, remember when you're looking to take these momentum triggers, you want to take them off the high in price, not necessarily the high in the oscillator. That gives you a decent divergence into a resistance trigger. So if you see a topside break here, I'd be looking still for a recovery. You need to clear. The good thing about this trade is that you have very clear-cut resistance on what would be considered near-term reversal, and that's this zone right here. The weekly open at 71.38, the monthly open at 71.50. This is the resistance region you need to get through to mark near-term reversal in Kiwi Dollar. That being said, as long as you hold below that, the broader trade remains bearish. So you have a really clear-cut bearish invalidation level at the weekly and monthly open, this range right here. Comwall, I got you, no worries. We will definitely do that. Let me just get Aussie Kiwi out of the way and we'll jump right into silver. Any questions on Kiwi Dollar? Again, just to be quite frank, not my favorite trade at this point. Haven't really been trading it or messing with it at all over the last couple of days. So something to reference, I think, but I can't justify, getting short here. And at the same time, you're at support, but you're not seeing too much yet to give us conviction to take the long just yet. If this thing finds a nice rally into the US Open, I'd be looking for a pullback to get long against that low. And that would just be looking for a rally into like 71 again. But other than that, I don't really think I'd be looking to do anything on this just yet. Aussie Kiwi looks like this. Daily chart. We talked about 106.55, 106.63 at nauseum, it feels like. And here we are making a nice reversal off that region. Again, that's defined by the 38.2 retracement of the entire decline off the highs for the year. So again, this is another retracement that takes into account all of 2016 price action. You have the 2016 open, which comes out at 106.63. And then obviously you have the 50 line here for the current operative slope we've been working with, which has been capping, certainly on a close basis, capping this advance with precision. Whoops. Boom. Right? So looking for a kickback. Broader trade remains constructive. You'd be looking for a more considerate pullback to get back on the long side. But what I do want to also highlight is now you're making an outside day reversal off resistance. Near term, that's still bearish. Now, again, my concern is that I don't necessarily think you'll get too aggressive on a pullback. Like this is where you would invalidate the broader upside bias. I don't think you get quite down there into 104.80. I think this is a region of which I'd start to look for some more concrete support. A really nice pivot in price. This is also the January opening range low for the year. And you have the 100-day moving average, which here, again, converges with those highs. Long story short, immediate risk is for a pull lower, but I'd be looking to buy that dip. Here's what Aussie Kiwi looks like on the near-term chart. So take a quick look back at our last Aussie Kiwi update. Okay, so these are the levels that we highlighted early in the week, unchanged. Okay, unchanged. You came into that key resistance region right here. We've since adjusted those levels. I got rid of that 618 just because we sailed through it so many times, and you have the monthly open right here anyway. So you're getting that pullback. Weekly opening range low and open comes in right here. And again, a 105.65 break would mark near-term exhaustion. You'd be looking for that correction down to subsequent support targets. Ideally, 105, I think, is where I'd start to look for some more concrete support and a rebound here in Aussie Key. But certainly near term, you're still at risk for a pullback. Topside break above 106.60, you're looking for this zone right here, 106.95 into the 107 handle. That's the monthly high, objectively, your monthly high, median line resistance, and the 200-day moving average. All right here. Aussie Kiwi, so wait and see. Yeah, I'd still be looking to sell rallies, Eileen. So if we get another pull, another rebound off this into the monthly open, you might get a decent opportunity to try to short it against those highs for the week. But you need to clear the weekly open and the weekly opening range low here to validate the near-term pullback. Ideally, if you miss the pullback altogether, you don't get a chance to get in, no worries. Look for support starting at 105. In this region here, it starts to look for some more concrete support on a rebound. Bullish invalidation 104.76 right here, like we said. This is what would change everything as far as the upside is concerned. All right. Actually, we can clean this up a little bit. Don't even need those levels. Hey, you're more than welcome. All right, that was number 10. Let's do silver here for Conwall. 11. Silver. 8G. Okay. So Conwall, nothing's changed here either. Here's the trade we've been following here on the intraday. Damn, that slope just continues to play out pretty well, huh? It's the median line. Checking that as resistance. Yeah, so even on a near-term play, I don't have anything for you here, Conwall. And you know that I'm more than happy to share my bias with you when I have conviction on it. I think you're going to see a little bit more consolidation, chop sideways to higher near term, maybe another tag of 1740, that critical region again before it turns lower. If we look at the slope here on the general basis for the daily chart, you're coming at a decent confluence. You see that? These support lines, resistance lines rather, caught the high, a parallel off the low from August, pivot, now is resistance right along that median line. That's exactly where we capped out here. Let's clean this up. Bear with me one moment. This is still huge. The monthly open, 1780. This is still going to be your bearish invalidation level, just for the record. Okay, he says, can you check to see for divergence? I don't see divergence per se. Now, if we go back, I can see where you might have seen divergence here. Okay, price action making a much sterner low, and I think we talked about this in the webinar early in the week. Price action making a much sterner low, the oscillator making an equal leg low here. That's still divergence. Remember, you're looking for the oscillator to not confirm an extreme in price. That's what's important. So price made a new low. Did the oscillator make a new low? No, that's divergence, right? But my point being, Conwall, is that that divergence signal, this might be the result. That might have already played out. You know what I mean? The upside signal was here. We rallied from 1663 all the way up into 1724. That might be the extent of it. I don't know. I don't think there's anything necessarily compelling here for me now. The only thing I would know is that we saw a perfect 40 bounce here in momentum. You see that momentum signature? So that would suggest that near term, you're still at risk for a pop higher, especially since this high, well, actually that held 62. Not much conviction on this. 60-40. Yeah, look for this range to kind of clear out. I would say that, if you put a gun to my head, I think this thing would kind of look to make another run at that resistance before turning lower. Broader story, stay bearish sub 1740 and look for a stretch down to 1651 initially. This is a near term also decent level of support you'd want to keep in mind. It's this region right here. Kamwal, does that make sense? He says, okay, sir, thanks a lot. Hey, you're more than welcome. More than welcome. I know you've been really active on the commodities, Kamwal. I would just suggest, just a word of advice, kind of want to tone it down just a little bit at these levels. On such a major stress here, sometimes you get a lot of capitulation, and that back and forth can sometimes just be a chop fest. So just use some caution here. I think we're on the right track. We've been doing really well with these commodities. I think the crude trade that you've been following, that we've been following, has been a little bit clearer than some of these hard commodities at this point. I mean, even if you take a look at gold, I don't know what to do with that. Again, same exact setup. I think you could get a little bit higher into resistance here, maybe even back into that low from last month and then move lower. But this is a huge, huge, huge support zone. Massive for gold. So sort of the same type of play. I think you could drift a little bit higher, come a little bit lower, but the basic focus is still going to be on that key support here in gold. He says, you are right, sir. Hey, Conwell, cheers, man. It's not about being right or wrong. I'm just trying to steer you in the right direction. All right. Questions on any of the commodities that we've been following here, whether it's crude, silver, or gold? Keep in mind, again, crude inventories at 10:30. Okay. Let's jump into some of your questions as well as dollar yen. I forgot to cover that, and I didn't forget about dollar Swiss. Was that for Trevor? We got time, buddy, so let's do it real quick. Here's what dollar yen looks like. I just want to highlight, again, obviously the dollar on the ripperoo continuing to kind of, just annihilate the bears. Here's what the dollar yen looks like. Again, from an intraday trading standpoint, guys, it's not just about knowing the direction, it's about having a setup. And right now on dollar yen, there's no setup, okay? It's constructive above 107.80 in my humble opinion. Right now, you're at net risk for near-term exhaustion. Momentum is still in overbought condition, so it's not necessarily, the signal hasn't been there yet for full-on reversal or anything. But here's what it looks like on the intraday chart. And the slope we've been following, the 50 line, it's never going to be a perfect tag, or it's not always going to be a perfect tag, but you're getting it. Divergence in near-term momentum. Boom, boom, boom. Lower high, equal highs. Divergence is getting tired. Trigger in momentum. Low in price. There it is. Looks like you're, Looks like you're getting the break, right? My point being, guys, is that there's a couple of things that are suggesting and marking near-term exhaustion, near-term weakness. My only problem is I don't have a major concrete level of resistance here necessarily that has caught the highs. Maybe I'm missing something I'm not seeing. You have a couple of swing highs here, but there's nothing really major. If anything, this swing high that you made back here in 2014, that's still higher, near 110. So it's at risk. Do I have a level of pinpoint? Could this thing open up the U.S. trade session, make another high here, and make another divergent signal, maybe come back, test the underbelly of this signal support, and then break lower? Yes, that's how I would look to play it. You're already 50 pips off the high, so for me to try to jump into a short here or anything kind of just doesn't make sense. Looking at the dollar-yen on an intraday basis, I got involved in a position here yesterday. I was trying to do the same thing I'm looking for right now. I was looking for a short position right off of that last tag into the 109.12 barrier. I thought that this was a great false break scenario. You had a nice momentum divergence on this as well. Weak signal because they're both above 70, but price action pressed into a new high. The oscillator made a lower high and then broke, quickly spiked above 70, then broke below. So I thought we were going to get a little bit more of a profound pullback. You didn't get it. And as soon as I started getting into the profit, I pulled my stop to break even way too early. I got stopped out at break even before it inevitably did fill and make a quarter of the daily ATR. So, by the way, which is 31 pips, quarter of the daily ATR. So my point being, guys, is very similar to pound yen in what we're doing, in that I'm expecting a little bit of a surge of yen strength, which could give us a pullback. Inevitably, you want to buy it, right? But the near term, I can't get excited and do anything on the long side, as we continue to press into these fresh highs. There's no risk to reward for you guys. It's just risk. So I'd rather be looking near term for an exhaustion pullback. I'd like to play that pullback. Inevitably, I'd like to use that pullback to get long. Dollar yen, a pitchfork off the July 2015 high, August 2015 low, and December 2015 high, also pointing resistance. Pooja, let me take those reference points and see what you're looking at. Talking about the July, I think you're talking about the June high, Pooja, right? The August 2015 low. Yeah, we're working with that, right? Either way. December 2015 high. Okay, so you're using this one. Excuse me. Oops. You're using this slope here. I see what you're talking about, and that puts you right there at resistance. Yeah, I think Jamie was looking at that one too. The only reason I was working with this one is because this is the concrete high, right? The actual concerted high that we made. And this slope actually caught, a parallel of that slope actually caught these two exactly, right? And not only that, as I took more parallels off this slope, you saw a lot more inflection, resistance, resistance, support, support. Same thing here, support off of resistance. The 50 line caught the high exactly back in May, and it also caught the high exactly back in early October. So, I was just looking at that slope. I was considering both. I know exactly what both of you guys are looking at. Me and Jamie are always very mindful of what we're both looking at. So either way, I think we're both looking at the same type of exhaustion play. I think this one may be a little bit better suited Puja on one basis. The fact that when it actually did break and it was a confluence with the 200-day moving average, you actually did get a massive rally, right? That's basically from 106 to 109. It's a 300 pip rally as soon as you broke, which is basically what you need, what you want to see for conviction on a breakout. So I'll stick with this right now. I think we're both looking at the same stuff. Either way, the resistance level here within the confines of the ascending median line formation has us there. We're both looking at near-term possible exhaustion. Small nuances to keep in mind. Good to know. Thanks. Hey, Pooja, you're more than welcome. Always interested to see what you guys are looking at for sure. Need those 50 lines in market scope. You mean the buy sectors here. There is a way you can do it, Eileen. Again, we can always rig it in such a way. I think I taught you guys that back in the day. If you take a retracement of the range and extend a parallel from, you know, the basically the median line to the lower point, take a 50% retracement, then extend the parallel off that 50%. You can do it. She says, yes, I know how to rig. Yeah, okay. Not the ideal scenario. I've spoken to the developers over there many, many times about copying pitchforks and adding the 50 line. They'll get it eventually, but not surprised to see that takes them a bit longer to do everything over there. Okay, and that is dollar yen. I do want to jump into dollar Swiss for Trevor. We are way over on time, I just noticed, but I'm going to take a look as promised. So dollar yen, I'm still hunting for shorts. You know, again, super, super nimble. You don't want to be fighting the trend. If you do take counter trend trades, please, guys, please, I'd rather you take 10 break-even stops than even one loss. We're taking a counter trend move. You know, as soon as the market starts to move in your position, you start to get a quarter of the daily ATR, and go ahead and bring those stops in. Does not pay to press a trade right now, especially counter trend. Dollar Swiss looks like this. Just really quick. Nope, Trevor, I made a promise. I'm going to keep it to you, buddy. I want to just watch that 100% extension and one spot, 10033. Okay, I want to see what today's close looks like. It's very indicative in that you made an outside monthly bar. Okay, if I bring this into a 1 month bar, you can't see it because of this line right here because of my monthly break. Let me just move that for you. But look at this. Covered the entire previous month's range and moved higher. That's pretty much as bullish as it gets, specifically because we launched off the low day close for the year and moved higher. All right. So with that said, again, you're still at the top end of the range. Okay. This is the range you've been in. Essentially, the range that we've been in is the March-April range. Those 2 months have defined the entire year's price action. So until we clear those, you know, that range, you want to be mindful of it. Long story short, you're coming up on near-term resistance. I want to see if we hold this today. Long story, 10080 is what you need to mark breakout. Such a scenario, you're looking for a much sterner advance towards the yearly highs. And this cushion region here between 103.30 and 103.50. We'll have to revisit this. Again, the reason I haven't really been interested in this is because there's really no play besides the range. And even to play inside the range, not interested. The only plays he had for the last couple of months has been buying at support, selling at resistance. Now you're coming into another resistance target now. Look for exhaustion on this way up into 10080. All right. Horace says, can I get your charts if I sign up for TradingView? I see your ideas are published. No, I don't actually share the actual charts, Horace. Besides, you get them here. Is there something I'm missing? You want to actually have them in your TradingView? Guys, I can share the chart, but the problem is these are updated so frequently. It would be a nightmare for me. I would necessarily basically need to upload it every single day. To make sure that you guys have the latest and most updated levels, and that just opens up a whole new can of worms. But something to consider, Horace. And I appreciate the question, man. Definitely something to consider. You're not the first person to ask that. All right, well over on time, but we got a lot done here today, guys. So we're gonna call it quits. Don't forget, Jamie's midweek strategy webinar is on tap at noon. today, so keep in mind that's coming up later today. And again, don't forget 10:30 Eastern, you do get the release of the oil inventories, which could shake things up, not for only for the dollar CAD trade, but also obviously for crude prices. Watch Aussie employment data later tonight, retail sales in the UK tomorrow morning, and we'll pick it up right here again at 8:30 tomorrow. Best of luck trading, guys. Cheers.